I would like to cover some of the formations right now. What do I mean by formations? Let's look at this formation here. We'll start with the morning star formation. What do I mean by that? The current trend is actually downward. As you can see, a lot of red candles. Then there is a small candle here. This is not even, it's not even a bullish, it's actually a bearish candle. It's a small candle. But the follow-up action, look at the follow-up action. Yeah, the closing is way above the previous candle, and it's a long green candle, which confirms there is a trend signal, but the confirmation comes only with a follow-up candle. First, there is a large candle. Yeah, but okay. Let's downtrend is confirmed. The large bearish candle is here. Then there is a small candle. Then there is a large bullish candle. But the follow-up candle, based on which the high of this above this is only a buy. You can keep this as a stop loss. What do you keep this, the low as your stop loss, and then actually you could be entering here. The high of this becomes your buying. That is where you decide to buy, and whatever happens is a further price action. It's a bullish price action. The follow-up action is up to you. Yeah, so the morning star is a visual pattern consisting of three candlesticks that is interpreted as bullish sign by technical analysis. Yeah, a morning star forms following the downward trend, and it indicates star in an upward climb as sign of reversal in the previous trend. This is about the morning star. And then we're going to talk about exactly reverse is called as an evening star formation. Yeah, exactly, reverse. An evening star is actually a stock price chart used by technical analysis to detect when a trend is about to reverse. As you can see here, the first, let's look at the upward trend. Then there is a doji. Then the follow-up candle, the red candle is such large, it's way below. There is a large candle formation here. So below that, now it's very clear. The market had a small sideways movement, and then once it breaks that level, there is a big fall. Then there is again a sideways movement, and then when that level breaks, as you can see, there is a major fall. This is how precisely the markets work. These are the levels. Now I hope you are able to visualize those points of supports and resistances. Yeah, we will see the resistance as it go. So it's the bearish candle, candlestick pattern consists of three candles. A large, first is a large green candle. Then there is a follow-up of white candles or a small, red candle. Uh, and then there is a red candle. Yeah, usually doji also symbolizes there is a trend reversal. So this is another example of an evening star. Also, we'll be talking about a dark cloud pattern. I told you dark cloud only means, basically what it means is actually uncertainty. So the follow-up candle is most important. Dark cloud cover is and a piercing pattern. There's also piercing in the sense any candle which is long enough, whatever period it might be, any candle which is long enough. Yeah, the half point can be taken as a most important, the trend decider, the 50% of that candle. So below definitely it indicates a little bearishness. Above that definitely signifies bullishness. So any dark candle you can always set at a 50% level as a trend changing. Now, what does it pierce? Now, when you say piercing, actually the subsequent candle, when it pierces below that, which actually is an indication, right? It is trying to tell something. But here, as you can see, the follow-up candle is most important. The following candle, after once the piercing happened, the follow-up candle confirmed that direction. Yeah, there was a dark cloud pattern, but it was confirmed. What if the next further candle was actually a green candle and it managed to close above? Yeah, we would not have called it, we would definitely not have called it into a bearish signal. Yeah, if there was a green signal, green here, it would have continued. The market trend would have continued. Actually, would have continued only because we had a follow-up candle which was much lower. There is a change in trend. That was a trend changing candle. Now, after dark cloud, here there can be basically there is an engulfing. There is a possibility of engulf. There is a possibility of gap. Now, what you see on top exactly, there is actually a gap. Um, in fact, the following subsequent candle managed to open high. There was a gap, there was an open high, but it could not sustain. As you can see, it could not sustain the high. It fell below 50% mark. It pierced. There was a pierce. and then it's actually a clear, this is a clear trend. See, market has the ability to go, but it could not sustain there. There is a sales pressure, sell pressure, selling pressure, and it falls down, which clearly says who is in control of the market. Is the bull is in control of the market, or the bear is in control of the market? Very clear. Even though there was a gap of opening, market could not sustain, and then it fell down, which clearly talks about sales pressure or coming down. Yeah, this is typically about the dark cloud pattern. Moving on, let's try and understand doji. Now, as I told you, dojis happen often. Yeah, in the rally, anywhere in the rally. It only says, neither the bulls are in control nor the bears are in control. What do you mean by that? When the open and close price are close by, are very close. The doji is the commonly found pattern in candlestick. In technical analysis, it characterized by being a small length, which means it's a small trading range with the open and close price virtually almost equal. It can be red, it can be green candle, any candle such. But usually when it happens in the top, when it happens at the top, you have to be cautious. The follow-up candle is most important. Even as you can see in this example, the follow-up candle is most important. What I would like to tell you, since here you are noticing it in the bottom, here you are noticing it in the bottom, the follow-up candle actually signified the bullish trend. Exactly opposite what happened earlier, what happened before that. It happened at the top. The follow-up candle was a bearish candle. Then the market had a slide down, and then again there was another doji at the bottom, and markets managed to move on. Yeah. So doji is very important. Actually, it is trying to say that I'm not sure, I'm not certain, but follow up whatever happens signifies how it can actually matter. Now, here, even though we are going to talk about hammer and the hanging man, the pattern is same. The color, there is a difference in color, and where it happens matters. Definitely what looks like a hammer here in the bottom, in the bottom, it looks like a hammer, which signifies the strength. Now the market is in downtrend. Suddenly you will find there is a hammer. Post that, whatever candles are forming, which is way above that, it signifies trend reversal. Similarly, when the market is in uptrend, and a similar hammer you find, which is not a hammer, which is a hanging man, which means, see, it opened high, fell, but retraced a bit, but closure is lower level. But this is happening in an up move. It is happening in an up move. It is hanging man. There is a choking. You can actually, when I say that there is a choking here, which clearly says there is a choking, the follow-up candle definitely is weaker. Then it again signifies that there is a negative strength. Yeah, this is in front of you. You can actually go through. Yeah, the definitions are here. You can actually go through. You can also make some notes about these things. But I'm going to show it to you in the real time. Yeah, this pattern actually forms a hammer-shaped candlestick, which is the lower shadow is at least twice the size of the full. What should I say? It should be twice the size of the real body, which is double. The wick, basically, when we're talking about the wick is actually longer. Okay, it's about that. And then let's look at the spinning top. So what do I mean by spinning top? A spinning top is actually a candlestick pattern with a short real body that's vertically central between long upper and lower shadow. The shadow, whether you call it as a wick or whether you call it as a shadow, the shadow is longer. As you can see here, there are multiple examples. There are multiple examples throughout. There are multiple examples throughout everywhere, as you can see. Yeah, there is actually a spinning top. It can happen at the bottom. It can happen at the top. Either places. The follow-up candle, again, the candle that that pattern, which subsequent candles will actually decide what is the pattern, whether it's going to set a weaker sentiment or a strong sentiment. Again, as you know, it is the open and close, close, or the price range is close, but the moment the volatility is much higher at the bottom, volatility is much higher at the top, but it has not sustained. Both the price points have not sustained. It has come back to the opening price, which means again indecisive. The spinning top clearly says indecisive. Again, the follow-up action is most important. Now, one of the most common and most promising, what should I say, one of the most promising pattern is actually an engulf pattern. I must tell you, is an engulf. What do you mean by, as the word suggests, engulfing is purely, as you can see here, uh, there is a candle, and then the follow-up candle is much larger. Follow-up candle actually engulfs completely, which is, which signals that there is a trend reversal. Usually when you find these kind of engulfing, usually in the end of rally, you're seeing currently the trend is bearish, then you see there is an engulf. That is where it denotes it's the bottom, and the follow-up is important. The further candle should be above, above that big candle basically. If it's a bottom, if you study the top, once there is an engulf, the follow-up candle will be at least 50% below the body. 50%, 50% is the crucial level. 50% below that, if the further candles are forming below that, then it signifies there's a trend reversal. I think this example is very clear. We're going to see a lot of engulf. Dojis and engulfs, we'll see plenty of them when we actually see a real-time candles, which we'll be studying as we go ahead. Now, the engulf pattern is actually a reversal, a candlestick pattern that can appear at the end of an uptrend or at the end of the downtrend. Yeah, the both are characteristics. It's actually, there is a small candle here. Again, I'm trying to read what is here. The first candle in the pattern is characterized by a small body and is followed by a large candlestick whose body completely engulfs the previous candle body. This is what we were talking about. Yeah, this is what you'll find usually. And then follow-up action again is important. Just never go by, the single candle definitely talks about the emotion of the crowd. Yeah, whether the shadow is longer, whether the shadow is longer on top or the bottom, or the body is big, I know it denotes an emotion. But the follow-up candle, what is it trying to say, is most important. If you have to ascertain and take your action, trading action. Yeah, again, this is here, the color is most important. What do you mean? What do you mean by color? Yeah, if there is a dark candle and then there is a, what I mean to say is that first there is a red candle which is smaller, but a follow-up is a large green candle at the bottom. It is bullish. Similarly, there is a green candle and then there is a green candle at the top, and then there is a follow-up is actually a bearish candle. Then the further, actually there is a slide in the market. Yeah, there will be a slide in the market. This is how exactly it looks like. Now, we were also talking about Harami. We were also talking about Harami. Again, I'm retouching this actually. A bearish Harami cross is a large up candle followed by a doji. Sometimes, as I told you, directionless doji. And it occurs during an uptrend. In an uptrend, suddenly you'll find a doji. The follow-up candle, breaches the the high, breaches the mid level of the candle, mid body, and then the bearish pattern is confirmed by a price move lower than the pattern. Yeah, as you can see right here at the example, this is a clear example of doji. As you can see, the market had an uptrend, sideways movement, and then it is actually now there is actually a trend reversal. Yeah, a bullish Harami cross is largely a down candle, which is followed by a doji, and it occurs during a downtrend. So where it happens, at what point it is happening is most important. Similarly, when you find a trend is downward or an uptrend, and then you find these kind of patterns, you can know the follow-up will be trend reversal, change in the trend. Now, most often we find these tweezers also. We find these tweezers bottom or even at the top, indecisive. Now, the two candlesticks should have alternating colors, with the first confirming the current trend and the second indicating the weakness in the trend. So usually the second candle is actually trying to tell what's going to come ahead. As I told you, just based on this, are you going to put a trade? No. The follow-up, the follow-up candle is most important. Does it confirm? Now there is a trend reversal that is signaled. The follow-up action confirms whether yes, that there is a trend reversal, or no, it continues. Yeah. So the tweezers at the top or the bottom patterns are minor trend reversal patterns that consist of two candles with the same approximate high. Usually we find them, it's like a duplicate, it's like a twin. Sometimes it could be in different colors. If it's happening at the bottom, as you can see, followed by a red candle, there is a green candle. Usually when it happens at the top, there is a green candle, then there is a red candle, which subsequently happens. And if the follow-up candle is way below, it confirms weakness. So these are tweezers which are most often, we find them most often, but these are minor trends. These are not, unlike an engulf we find, or an harami, which is more, more, what should I say, these are more definitive. These are small trend changes.